Ever wonder why gold glitters on your screen one day, then plunges without warning the next? It's not just magic or random luck. Gold has captivated humanity for thousands of years, serving as a symbol of wealth and power. But its price isn't some ancient mystery. It's a living, breathing story shaped by powerful global forces and even our own human feelings. Today, we're going to pull back the curtain and show you the main players behind gold's wild ride, from soaring peaks to surprising drops. By the end of this, you'll understand what's really making that precious metal tick. You see, for something so tangible, gold's price often feels incredibly unpredictable. One moment, experts are shouting about its unstoppable rise. The next, it's tumbling, leaving many scratching their heads. It's like watching a high-stakes drama unfold, but without knowing the script. How can an old, reliable asset like gold be so volatile? The truth is, its price is a complex dance between a few key players. Let's start with a big one: inflation. Imagine your dollar today buys you a delicious big pizza. Now imagine next year, that same dollar only buys you half the pizza. That's inflation, your money buying less over time. Gold, unlike paper money, doesn't get printed more often. So when inflation eats away at the value of currencies, people often flock to gold. It's seen as a safe store of value, something that holds its worth better than cash during these times. Think of it as a silent superhero protecting your purchasing power from that invisible thief called inflation. Next up, we have the powerful, often misunderstood central banks. These are institutions like the Federal Reserve in the US or the European Central Bank. They're like the financial conductors of an economy, pulling levers like interest rates and deciding how much money is flowing around. When central banks cut interest rates, it makes saving money in a bank account less appealing. Why keep your cash there when it's barely earning anything? People then look for other places to put their money, and guess what? Gold often becomes a popular choice. On the flip side, when interest rates go up, holding cash becomes more attractive, and gold can lose some of its shine. Central banks also hold vast amounts of gold themselves, and their decisions can send ripples through the market. Now, let's talk about the big, scary stuff. Global crises, wars, pandemics, economic meltdowns. These are the moments when people get really nervous. When the world feels uncertain and traditional investments like stocks seem risky, investors often rush to gold. It's the ultimate safe haven. It's like people seeking shelter during a storm. Gold has a long history of holding its value during turbulent times, so it becomes the go-to asset for safety, pushing its price higher. Remember when the COVID-19 pandemic hit? Gold prices surged as fear gripped the global markets. And finally, we can't forget about investor psychology. This is the human element, the fear and greed that drives so much of the market. When news stories are full of doom and gloom, or there's a big buzz about gold doing well, more people want to buy it, pushing the price up. It's like a crowd rushing towards the same exit. The price gets jammed. Conversely, good economic news or a sudden sense of stability can make investors less fearful, causing them to sell off their gold and invest in riskier, but potentially higher return assets like stocks. This herd mentality, driven by emotions rather than pure logic, can cause significant swings in gold's value. So gold isn't just a shiny rock, it's a thermometer for the global economy and human emotions. Inflation eats away at your money. Central banks play with interest rates. Global chaos makes people nervous, and everyone's feelings push its price around. Understanding these powerful forces is key to grasping why gold rarely stays still. Want to know if gold is right for your investments? Check out this video next.